Good morning, Stan Stahl of SecureTheVillage. We're here with our monthly webinar, and this month we're conducting an information security risk assessment. That's the topic for the month. And let's see, my guest today is John Coleman, who is the Chief Information Officer of Grandpoint Bank. And one of the special things about having a banker for a discussion about information security risk assessments is that bankers are continually both doing risk assessments and under the gun for others doing audits on them. So John, it's a real pleasure to welcome you to our show this morning.
Thanks, Stan. I really am glad to be here. Definitely can contribute to this topic. We do risk assessments regularly, and we do them in quite a detailed fashion. So
yes,
I can help.
Yes, you do. You certainly do. As we've been talking about that, and we've known each other over the years, talking about these kinds of things. So let's see, what's our objective today? So there's two kinds of pieces to this stuff, if you will. One piece of it is, why are we doing this? And we'll talk about the key role that the information security risk assessment plays in an overall information security management strategy. And then we'll also go into some of the real details, get down in the weeds, if you will, of the information security assessment, the key elements of that assessment. So we'll be looking at both of those. And to kind of set the stage, John, you and I were talking yesterday about Louis Rukeyser and his Wall Street Week show back in the 1980s and into the early 1990s. His father, Merrill Rukeyser, was a financial journalist and was on the show once. And I wrote this quote down because I thought it was so impressive and important, that the secret of success lies in managing risk, not avoiding it, that you can't avoid it, but at least you can manage it. So that's our objective, is to always be managing risk. So let's start with the why question and spend a couple minutes talking about why one does an information security risk assessment. Ultimately, it's because it's business risk, and maybe John, you and I can both talk a few minutes on this slide, because it's so much sets the stage. Why are we doing these things? So John, why don't you jump in?
Yeah. So exactly to the points that you've got here. Risk can impact the business in so many ways. There's financial risk. There's risk to the bank's, reputation. There's risk to, customers. So, the reason that we want to assess risk and to do something about it is to protect those things that are vital to the business.
Yeah, it absolutely is. The whole point here is, if you don't know what your risk is, you can't manage it. It's like, if what isn't measured can't be managed, and well, that's probably an overstatement. If you're not paying attention to it, you can't manage it, and you got to manage it, as you just mentioned. I mean, we've got issues of cybercrime, of business disruption. Murphy's Law, Murphy is alive and well, particularly as our systems get more and more complex, and we're seeing more and more laws and regulations in this space as well. What we're going to do now is look at some level at risk in a different context, a broader context, if you will, than just information security. It helps to kind of spread your vision out more broadly. And we'll take a look at risk, not in the information security example, but we'll take an example outside. And John, you've developed it for the banking, for the bank community, like the kinds of things you do. And then we'll take the insights that we get from that and begin to apply it into the information security risk assessment itself. So John, starting here, I mean, you've got some of the key questions, key considerations that one, just again, we're not talking information risk specifically here. We're talking more generally, a more broad perspective on risk, the kind of thing that every banks being conservative entities, if you will, every banker has to pay attention to, not just, as I say, on the information side.
Yeah, that's right. We were talking yesterday, and I consider the information security and IT professionals to really be leaders in this area, because we We live with, extreme risks, if you will. Any system, any network is a target these days. And so we've gotten very used to the idea that we have to really look for weaknesses and identify controls, whether they're technologies or skill sets or whatever, to offset those risks. What businesses really need to do is to look at risk in a more global fashion. So, risk can be physical. They can be, unplanned things that, such as disasters. And I really see IT professionals and information security professionals being able to help the overall organization in identifying such global risks. So, yeah, the things that we've got here is when do you need to do a risk assessment? When you do a major business change, when you introduce a major system, if you're required to by regulations. You can do a risk assessment for any reason. There's sometimes you have to do them, sometimes you just feel it's a prudent thing to do. As far as who should participate in them, anybody who has a stake in the thing that's being assessed. So, for example, you'll see that we're going to talk about a new product example. Well, the business owners that are in control of that new product should certainly participate, but then also subject matter experts that would typically participate no matter what. So IT, information security, compliance, etc. How often do you perform them? Maybe just one time. So if you're introducing a new product in our example, maybe you just do it when you are considering and launching the product. Other times you may do it annually. And then finally, who reviews and approves? Typically, it would be compliance, it would be legal, people such as that, or a product committee in this case.
Same thing when we're looking at the information security assessment. And again, the review and approve has got to include, and again, we'll get into this later, but that process has got to include the information security manager, the leadership team that we talked about over the last couple of webinars. And ultimately, oftentimes questions need to get up to the C-suite executives. Even issues can be raised to the board that they have to approve because the risk is such that it's something that they have to take a look at. So, good summary of those points here. And when you look at risk assessment contents, and again, this, whether we're looking at information risks or not, we're looking at things like on these slides. And John, do you want to just jump in and opine on this?
Sure. And again, we'll go into these things in an example on the next page. And this is going to be an example of a pretty basic risk assessment. You want to identify the risk areas and the things that could be impacted. So I'm calling out here financial impacts, reputational impacts, legal impacts, impacts to operations. Mm-hmm. Types of risk exposures, they can be, again, anything. And the trick is that the people that are involved in the risk assessment should really think in detail about all the things that could go wrong. Could something happen through an intentional act? Could it be something that is purely by accident or, acts of God? Could they be human or non-human things? And are they internal or are they something that happens outside the business? And is somebody acting on the business maybe in a malicious fashion or that sort of thing?
Yeah.
The next thing is, for each of those risks, you really want to look at what is the likelihood that it could happen. So if you have a really significant risk that you think is going to cause a very severe problem, the next thing is you want to look at the controls. Well, you better have really good controls to guard against those risks because you think there's a high likelihood and it would be very damaging. The last thing is to come up with, after you've looked at the risks and the likelihood and what sort of controls you have, are you confident that the risk has been adequately controlled? If you can
That's
say, yes, we've got risk to a manageable level, that's what you want to accomplish, and hopefully you're going to come out of your risk assessment and say, I feel very good about where we stand.
yeah. The idea here that this residual risk that you're talking about is like no matter what controls you put on, the likelihood of getting to zero risk is very tiny. It's very
Not
like
going to happen.
challenging to do.
Exactly.
Yeah. As I like to tell people, if you want zero risk on the information in your computer system, uh, dig a hole in your backyard about 10 feet deep, drop your computer in, uh, now pour a lot of concrete over that computer and fill up the hole. And even there, somebody wants it badly enough, they'll dig up that concrete and they'll go get the, maybe, destroy the hard drive before you even do that. Now you're getting residual risk down to like zero levels. But short of that, and this becomes one of the key pieces, I think, of as you look at risk anywhere, there's always that residual risk. So it's understanding that and agreeing to it. That's where the stakeholders come in. Let's go to an example. Let's talk about this. And again, as we saw, this is not an information security example, and that's purposeful. It's to look at this stuff in another context so as to help us in the understanding of when we're doing information risk. So again, John, you're the banker. This is a bank risk example.
Yeah, so we talked a little bit about the risk categories, and I've just called out some of the major ones here that would be applicable in this situation. Normally, what you would have is in the financial arena, you would have potentially pages of risks. Some of these assessments can get pretty lengthy, and they should. You don't want to skimp on them. You don't want to gloss over things. It's not perfect. It's more art than science sometimes, but you should really try to make a good effort to really take a look at what sort of risks are out there. So these are just examples of risks. I won't go into detail on each one. The third column, the risk impact, says, okay, if this risk were to happen, what would be the impact on the category? So in this case, if we ramp up this product, and if borrowers have high default rates, which can happen certainly in this type of business, it could have a real adverse credit and financial impact. So we'd say very high risk. Again, because this is a very risky business, we would say the likelihood of that is high. So turning to mitigating controls, you really need to think through what do you need to control that risk. Certainly expertise in this arena. You need to have very clear policies, underwriting policies and procedures, collection policies and procedures, things of that nature. Potentially you'd want to have a pilot test, which in itself is a type of control. And when you do all those things, hopefully you can come back to, well, if we have these controls in place and we have confidence in these controls, we feel that this residual risk rating for this particular risk is low. So there's one example here for each of these risk categories, which would be important in my situation in a bank. I can tell you right now, if you go down to actually the last two, really the last three, vendor, information security, and business continuity risks, those are primarily within the arena of IT and information security. So that gives you an example of the bulk, if you will, that we contribute to this process, because those are very key things. Mm-hmm. And why information security professionals, A, need to be involved, and B, because we do this and understand this, we can help lead this process for the rest of the business. So as I said, there's sort of one example here, but you would expect that each of these risk categories would maybe have several pages of risks and controls and so on and so forth. So if we go to the next page.
Yeah. And just before we do that, let me just jump in and make an observation here. What you said I thought was very important about, again, looking at these last three rows, having now an information security IT component to them. A lot of banks obviously go through a very, very formal process like you're illustrating here, but even any business looking to launch a new product or move into a new area, anything like this, even if it's only by the seat of their pants, will at least begin thinking about what's the risk of doing that, to the extent that it's formalized, and anything significant obviously should be formalized. You can already begin to see the role. Well, even if it's not information security or IT specific, they need to have seats at the table, because so much of the risk of anything happening in a business in today's world relies on the proper and effective and secure operations of the information systems. And I think that I don't want to get past that point too quickly here, because I think what you said was very, very relevant. Again, no matter what the field is. So it's noticing that even on something like, okay, we're going to think about introducing a payday lending service. There's still an information security component to that. I don't want that to get lost. That said, yeah, now move on to the next slide. Go for it.
Absolutely.
Yeah.
So when all is said and done, in each of these major risk areas, what you would the result would be that you would come up with sort of composite or summary risk ratings. In this case, these are again examples. We show that, okay, the overall risk before controls, is high or medium or low. The strength of the controls overall against these things is, high, medium, or low. And then our residual risk is high, medium, or low. And then, what is the overall conclusion, for this particular, product that we're looking at launching here? So it kind of brings it down. This is your executive summary, if you will. If you were to do a presentation to a board of directors, or somebody that doesn't need to see all the details, this is the type of thing that you would want to present to them. You might want to indicate, the number of risks identified, the number of controls, things like that. You can go into a little bit more detail, but you certainly don't want to get too top heavy with those types of things. And then lastly, you will hopefully, as a result of this, identify some gaps. There will be some things that you think, okay, we really could, stand improvement, to be sure that we, can bring this residual risk rating down from maybe a moderate to a low, or a low moderate, that type of thing. So you would identify those things here. Good old-fashioned project planning, you would indicate, okay, these are the things that we want to implement before we do a launch. So let's assign roles and responsibilities. Let's track this as a project, and let's get these controls in place.
Mm-hmm. Yeah, very appropriate.
And again, in the case of an information security risk assessment, this is actually a very good format too, that you can use. And the risk categories would be, just for example, things such as physical information assets, hardware assets, applications, data assets. So you can take a very simple format like this and adapt it over to the IT and information security world very easily. We actually have a very lengthy risk assessment process for just information security. And it goes, one of the things that it brings into play is the vendors that we deal with, because so much of our information and critical systems is interrelated with vendors that we use that do processing for us and things of that nature. So our information security risk assessment is very much interwoven with our vendor risk assessment.
Right. We'll see that again as we go into the information security when we take this and kind of specialize it into information security, of course, there's a whole section on that vendor risk management. For those of you who are on the broadcast a month ago, or have had the chance to listen to it, Securities and Policies and Standards, it's the standards that act as the controls in so many cases. And of course, vendor risk management becomes a key piece of that, as we talked about last time on the policies and standards. Okay, so you've done all this, John. You got your numbers, you've gone to the board. Now what? What's next? How do you use that assessment? And again, this is the kind of generic example, but then we'll get into the information security. Okay, let's focus on that in a minute. But just as a general rule, you've got identified some kind of what's next steps to pay attention to.
Right. So I did mention that, you would, in a summary, indicate what some of the major control deficiencies or gaps that you identified. So you would want to address those. The next thing is, once you have your risk assessment completed, you would go back to, the point where you said, okay, why are we doing this? If we're implementing a new system, we've done this risk assessment. We really have a very good idea now about, how much are we entertaining risk? Is this something that is so risky or, potentially harmful that we don't want to move forward? So, or alternatively, that we feel good about it. We've actually got some very strong controls, and we, think that this is definitely something that we can and should do from a risk standpoint. So really, it's the input to the overall decision-making process is that this is kind of a checkpoint on the list of things that you would look at to make a go, no-go decision.
Mm-hmm.
You would also use risk assessment outputs as inputs to your audits, your self-assessments, your internal training programs, and that sort of thing. So the controls that you identify, and I assume that we're talking now in this webinar to people that are involved in smaller businesses, maybe some larger businesses, but just because if you don't go through large audit processes, you should periodically, as you do these things, go back and do a self-assessment. You can pull out the risk assessment and say, we looked at these and we thought we had these controls in place. Do they still hold true? Do the risks still, pretty much line up with what we thought were the risks then? So it's almost a refresh, if you will, in that case, as opposed to, a comprehensive audit where you bring in a major audit firm and they create audit programs that go in and, test those controls and everything. So, but that's an important input here is the risk assessment results. Another thing is go ahead.
Sorry. No, I was just going to say, what we're saying is, it's to me, there's a cycle going on here that you assess what your situation is. This is, again, very much like we're talking here in the abstract. You assess your situation. You decide what you're going to do in that context. You plan it. You implement it. Now you assess it again, including the assessment of how well did their implementation go against your plans, because now that's now a kind of a second order piece of the assessment. And then you repeat as necessary, repeat in an ongoing way. It's that assess, decide, plan, implement cycle, which very much of people who are familiar with ISO 27001 with their plan, do, check, act, which comes out of the Deming model for manufacturing quality systems and things of that nature. It's kind of the management equivalent, that assess, decide, plan, implement cycle, like plan, do, check, act. There, the check is the assessment piece in the Deming world. That's identifying improvements for future risk assessments and using as inputs to audits and its other assessments and training. So important in that context. I do want to move on because ultimately the assessment process we're talking about today is assessing information risk, and that's very, very specific to these kinds of things. So you and I have identified kind of the basic 7-step process in all of this. And again, this is all reflected on the resource kit in the Secure the Village website, securethevillage.org. If you go to resources, the resource kit. If you look at the key steps, and we're going to, this one slide is a summary, and then we're going to go look at each of these in turn. It's identify your assets, identify the framework against which you'll be doing an assessment, because those are different. We just implicitly saw a framework in your example of the pay date issue, but identify the framework, identify the threats. What can go wrong? Where's Murphy apt to be living in your world? Identifies and characterizes the threat actors you've got to defend against, right? If you're the NSA or a bank, you've got to be prepared to defend against, let's say, a nation state. If you're a small business, you've got other threat actors to defend against, but the likelihood of a nation state attacking you may be rather small. So there's that issue to take into account. Identify how they are likely to attack you. Not how likely you are to be attacked, but how they're likely to attack you. We'll spend the time on that because that's key, because that's helping you now identify your major vulnerabilities. If you know where the enemy's coming, you can look at your defenses against that. Okay, those are your controls. And then for every asset that you've got, and each threat and every threat actor, you've got to analyze that residual risk and decide what to do about it. Those are the 7 things, ultimately. So with that, let's spend the rest of this webinar jumping in and looking now down a level of detail at these seven items. So first, what are the assets? And we'll talk about these in a minute, but basically they fall into 2 categories. What do you have that you've got to legally protect because it belongs to other people? And what is it that your own internal information assets that you've got to protect because they define how you run your business, your organization, and how you plan to run it. So let's spend a few minutes first on the legally protect side. And John, again, being a banker, you got a lot of stuff you've got to protect here.
Absolutely. And it is very similar to HIPAA, for example. The whole underlying issue is that customers are giving you their information, important information, sensitive information, and they expect, a certain degree of protection so that, it won't be disclosed either accidentally or through malicious acts. And so that's to us, between protecting people's money and protecting their information, those are the highest standards, that are applied to a bank. And so much of what the regulations are centered around are exactly those things. And risk assessments are part of the mandated process for continually going back to your point, Stan, about on an iterative basis, on a life cycle basis, at least annually going through and reassessing, how are we protecting these information assets? First of all, what are they? What's the inventory of the assets? What are the risks these days? Are they new? Are they different? Have your controls kept pace? And then do you have those risks down to a reasonable controlled level?
That's right. Yeah. And when you look at all the things on this list, I mean, some of the things that stand out to me on here, because when we walk into a company and we start looking at their information assets, it's like, what about passwords to critical systems? And it's like, oh, nobody's thinking about that as a piece of information, as an information asset that by God, it better be protected, they're thinking of credit card information, or maybe their intellectual property and things like that. Maybe their e-commerce systems, backup and recovery systems. We live in an earthquake area here in Los Angeles. Are those systems themselves become critical assets? And when you look on the other side, GDPR protected information. Yesterday, I think it was yesterday, California just became the first state in the nation to pass a GDPR-like privacy bill for consumers, so that any business, and I haven't seen the law yet, I'm waiting to get a better perspective of it, but it looks like if it's like the breach disclosure laws, it'll be any business anywhere in the world having information about California residents needs to protect that information, privacy issue. Just this week, we saw a marketing firm, Exactus. They leaked personal information of about 340 million records. And if you look at their website, they promised their customers who would buy this, data from them, they promised that they had information on like every home in America, every household in America. And now that's been leaked on the one side. On the other, very soon, anything like that's going to be illegal in California. That's part of the risk assessment, has got to begin looking at, okay, what's all that information we have, and are we properly protecting it? So that's the information assets of the organization. We want to assess the risk that we're going to lose that information, or that information will become unavailable or whatever, and then what's the impact to the business. And doing that risk assessment always takes place in the context of an assessment framework. Again, on the chart here, you're seeing on the left-hand side what you could call information security management standards. There's the NIST cybersecurity framework, ISO, the CIS 20, and then the SecureTheVillage Code of Basic IT Security Management Practices, which we built up out of the CIS 20. They're kind of an amalgam of the CIS 20 and the NIST stuff, if you will. And then we get so much of what you have to pay attention to on the regulatory and compliance side. You've got GLB, Gramm-Leach-Bliley, obviously. You've got the Federal Trade Commission, GDPR. That's a typo, that should be on two lines, not one. Banks with business in New York have new cybersecurity requirements they have to comply with. You and everybody else involved in the credit card world have to comply with the payment card industry standards, and so on. Tell me how you integrate these frameworks into your risk assessment.
Well, it's interesting because the NIST framework is the direct underpinning of our cybersecurity and information security risk assessments, and were really the basis on which the regulators built their own recommended risk assessment model. So, just as you said, Stan, we take these frameworks, which are really great pieces of work. I can't say enough about when 9/11 happened, and when the country realized that there were real bad actors out there, things like NIST were really brought into play. There was a presidential order that said we must protect our critical infrastructure, and that's where the NIST framework came about. And great example of government actually playing a leading role, that's been very useful for private enterprise to find a standardized way to approach these things. NIST permeates different organizations, whether it's the ports and shipping, whether it's the financial services industry, healthcare, you name it, that each of those industries has their own interpretation of that and have built out these risk assessment frameworks on top of it. Very vital. So yes, it's a very good point, Stan.
Yeah, we find in the work we do as well, the NIST framework, it's a nice model to use because it's so much focused on, if you will, almost like a life cycle. So they identify what you've got protected, detect when something goes wrong with it, be able to respond to that, be able to recover from that. It's very action focused, whereas ISO, also good as it is, but ISO tends to be more vertical. These are the kinds of things to pay attention to, as opposed to the action steps that NIST has. One of the differences we see there.
They really are useful for different things. As you say, the NIST framework is sort of, action oriented, similar to, the sort of example that I just provided. It's an inventory type of an effort. CIS, on the other hand, provides some phenomenal tools for you to understand what a secure configuration should be on a particular device.
That's right.
And they provide self-assessment, tools that you can download and run against a server or run against an Exchange
Yeah.
email box and see if there are gaps between what they consider to be secure settings and the way you have it set up. And
Well,
so they're
exactly.
all
Yeah. Mhm.
they're all to a certain degree complementary and really useful tools in the arsenal.
Yeah. Let's look at it from the other perspective. Okay, so we know our assets. We've got a framework against which we're evaluating. And now we start looking at, okay, so what are the threats? And in the broad sense, we move to that slide. There we go. There's four threats ultimately that we're really dealing with the industry. Three of them the industry's identified from the beginning. The fourth one may really be subsumed by the one of the others, but there's this what's called the CIA triad that anybody familiar with information security knows about. Confidentiality. So one threat is information can be copied or stolen or misplaced or whatever. And we're talking like credit card theft or medical records theft or theft of intellectual property. We can have information changed without authorization, invoice fraud being a good example of that. Uh, and sabotage is another. You've got a control system that's supposed to work in a certain way, and somebody goes in and sabotages it. Think Stuxnet as an early nation state attack against another nation state, where the whole idea was sabotage, where we changed the way subsystems, nuclear systems were to behave. Information can be made unavailable. And of course, there's so many businesses are dealing with ransomware now as an example of that. But we can't forget DDoS attacks as another. And then again, here in California, information becoming unavailable. We've got to protect against the threat of earthquakes. That's a non-human act there. And then just that fourth category, that fraud and misuse. Seeing a lot of business email compromise. There's just actually a cyber law enforcement event where a number of people were just arrested. A man in North Hollywood was sentenced to 7 years in jail for participating in a business email compromise ring. That's one side of it. But then with Bitcoin mining and things like that, we're also seeing a lot of theft of computing resources. So in the general sense, these are the threats that we've got to defend against. What about, how's that play out in the banking world with what you see?
Yeah, it very much is the case with us. Our major sort of risk vectors are, and this, I'm sure most everybody's figured this out by now, are people related.
Yeah.
We have people that are just, they're human, and it's very easy for them to be fooled into doing things. So the whole idea about a phishing attack is that you send an email that says, this is the president, I need to send a wire transfer, it's really urgent, let's do it now, and people are still falling for that.
Oh yeah, oh for sure.
And so the training requirements are ongoing, absolutely. The ones that are very disconcerting and that we try to help with our customers, but so much of it's beyond our control, and that's that they are subject to account takeover schemes, and their computers being compromised with malware so that their login credentials are compromised or whatever. And so we have invariably situations where people lost money from their account, and there's really no most insurance policies, if you have cyber insurance, you have to be very careful. We have an expert in SecureTheVillage who's very knowledgeable about this, Howard Miller, and I think he's going to be doing a webinar with you talking about this very thing, that you have to be very careful about insurance in those situations to compensate for money. You would think that, well, that's a no-brainer. If I'm hacked and among the things that I lose is money, that my policy should pay for that. Not so.
Oh yeah, and we've seen that sadly with clients that expect that or just businesses out in the community that expect when a loss happens that either the bank's going to cover it, but in fact the fraud occurred not with the bank, but in the company, the threat manifested there, where they're expecting that their insurance policy will cover it, and yet it's not covered by the classical crime policies, nor is it covered by a classical E&O or those kinds of things. And yeah, in a few months, Howard will be on here, and we'll be talking about cyber risk from that in insurance perspective. It's not just that, like what's that, what's being threatened, but who are the threat actors that we've got to defend against. And you can see on this slide that we're looking at, first of all, non-targeted versus targeted attacks. Sometimes a business will get hit. It's a fisherman who throws the net over the side of the boat, and whatever swims into it, that's what he catches. Other times it's a very targeted attack. Think North Korea attacking Sony a couple of years ago, or the attack that went to Target or Equifax or any of them. When it comes to who's doing this and how sophisticated they are, we've got everything from lone wolf cyber criminals, the 400-pound guy in his parents' basement, that kind of person, but also so much more of cyber crime is now the threat actors are organized. It's a whole business ecosystem if you look at the dark web and how that's going. Oftentimes, sadly, it's malicious employees or it's vendors who are the threat actors, purposeful. And sometimes, to your point that we were already talking about, John, sometimes it's employees or vendors, people like that just make inadvertent mistakes. Stuff happens. They're not paying attention. Sometimes it's competitors. We were called into a situation a few years ago in the apparel industry here in LA, where somebody was concerned that they were showing up at customers, and gee, it was funny. A couple of days before that, their competitor had shown up and had already sold them that season's garments, whatever it was. We took a look at their computer systems, turned the information over to the district attorney's office because there were clear competitors had hacked into their system. Sometimes it's terrorists or political enemies that are doing this. There's been attack by the left on the right on the left. Hamas and Israel, their websites are constantly getting hit by the other. We've seen that with Iran and so on. Sometimes it gets very, very serious on one side, what we did to Iran with Stuxnet, but then the other side, shortly after that, Saudi Arabia, Aramco, had 40,000 computers destroyed by an act of terrorism from what looked to be the Iranian government, nation states and terrorists and all. And then again, we can't ignore, particularly in California, the natural disasters there. In the interest of time, I want to jump on to the next slide because I think it's the more interesting slide in terms of stuff to talk about here. How are they likely to attack us? With the idea that first and foremost, John, as you just said, is social engineering. Let's spend a minute or two just on this slide, and then take a look at where our vulnerabilities are likely to occur as well. So again, you live in this world, protecting against these kinds of things.
Yeah, vendor attack. That's easily. I'm waiting for the day when one of the major bank processors that serves the community banking industry wakes up to a major attack. It doesn't take a lot of studying to find out that there are about 4 or 5 major bank processors that literally process almost all community banks. And if you attack one of those and take it down, you're talking about the kind of nightmare scenario of a major bank failure or 2 or 3 of the major banks going down.
That's right.
So vendor risk and of attack is just absolutely huge. And of course, most people have know about the attack on Target, which was through a vendor of theirs that had weak systems. Somebody attacked the vendor, and the vendor used that to get into Target and steal credit card information and do other damage.
Yeah. Yeah, and you look at this list, and it's attacks on vendors. You look at the technology vulnerabilities. I mean, we go into into companies and we'll do a vulnerability scan on their network, and we'll find tons of unpatched bugs in their system, where patches have existed in some cases for even 10 or 15 years, and the IT group has never gotten around to patching that particular vulnerability. That to us is, that and social engineering are the things that give us the greatest heartburn.
The other thing, real quick, that is on the rise is that there are more incidents now of acts where it's combining both internal and external actors.
Mm-hmm.
They will place an employee in an organization so that they can begin to understand how does it operate, what are the systems, how can we gain access, and then the external party, uses that to, begin to run a scheme which may involve the internal person opening a door to access, so that the external party can then run the exploit. But
Right.
and that's why, going back to the prior example, human resources is a huge issue. HR needs to be involved in risk assessment processes because they need to look at hiring practices. How do they screen people? Are they careful?
Mm-hmm.
Do they run? We had a terrible incident where we hired a person, and we did the fingerprint check first day of employment. We thought, that's what we'll do. Well, that came back 24 hours later, and there was something, in their background that was really a big deal, and we had to let them go. So,
Mm-hmm.
timing and quality of employee screening is really critical.
Yeah. Well, yeah. One of the things I've thought for years, and I've said this, is that, if you want to get into a company that way, if you're Tony Soprano, or you go back to The Sopranos, or Michael Corleone, you get your cousin a job with the custodian staff, and now he's in supposedly emptying wastebaskets and all, but God knows what he's doing. That kind of thing. And what you say about HR, that's a shout out for September 12th. Secure the Village is hosting an event up in the Woodland Hills area, very specifically donated to the human resource, securing the human resource that way. We've got a panel of solid. Howard Miller, who you mentioned earlier, is going to be on that. Christy Hodson of the Girl Scouts YWCA is going to be there, and Girl Scouts. Sorry, let's get that right. My business partner Kimberly Pease is also going to be on that panel. So that and one of the other people on the Secure the Village board, Sandra Lolino, will be there. So that's going to be a really good event. Again, that's September 12th up in the Woodland Hills area, and we'll have a whole session, a whole webinar on securing the human coming up in a couple of months as well. I don't know who my guest will be on that. But certainly that's one of the critical things is paying attention to the human. And in fact, if you look at the next chart, which is just, okay, so where are we most likely to be vulnerable? And first on that list are our people. That's where the attacks we're seeing coming in. You live a lot in the process technology world as well, John, don't you?
Yes, absolutely. We are responsible for that, area of the business. We share ownership of processes, but we definitely have responsibility for the technology components. And
Yeah.
these days, that's a big part of what happens in a bank.
Yeah. And when we look at, I put together some case studies and do a lot of speaking on this as well. And when we look at the case studies, whether it's Equifax, Target, or the DNC hack as well, in all of those, what you see as missing is the management, the leadership from the top. Equifax is perhaps the purest example of that, because if everything that could go wrong did, even up to, and this was to me what was particularly galling, if you will, about that whole incident. I mean, here, there are 120 million records, 160 million records were left open on the internet with very poor controls on them. And the chief executive threw his IT people under the bus in testifying to Congress. I grew up in a world where the buck stops here was the on the desk of the chief executive. And that's always seemed to me to be the case. You don't throw your people under the bus when you've failed to provide them the leadership that they need. But that, and you go back all the way to the first webinar we had in this series, Bill Leiter and I talking about leadership and cultural adaptation and how important that is. As that's where vulnerabilities so big, so important. So we put it all together, and that gets us to this next slide. Kind of this is the seventh slide, and then that sequence we were starting. So we now understand what our information assets are. We understand the threats. We've analyzed the threat actors. We know what our own controls are. So now we get to ask the key questions. How likely is the risk to manifest? And again, go back to your example. That was one of the things you looked at. How important is managing the risk? And that's what are the consequences of failure? How significant would the damage be if something goes wrong? And now we get to the controls. What controls do we have to keep this from happening? Right. So I mean, that's kind of the thought process that you go through when you're doing this stuff, right?
Yeah, and to your point, some of these things you're going to say, well, okay, it's a risk, but it's a fairly low risk, and it's even, a more remote likelihood of it even happening. So, if it happens, it's probably not that big a deal. So then you would look at, the controls and say, okay, we have, a control here and there, but because of the low relative nature of the risk and the likelihood, you feel okay with not throwing, a big budget into something like that.
Mm-hmm. Yeah, and that's a critical thing because you can't. I mean, part of risk management is that you can't. It's not cost affordable to manage and control all risks down to a tiny level of whatever of residual risk. So some you have to live with, and it's now let's be as smart as we can. Like to the other point. Part of the assessment has got to be how confident are we that the controls are working correctly. I mean, we've seen, and again, I mean, I would hope the bank would never see this, but sadly we have, where among the controls are a daily backup system. Mm-hmm. Good control. Something, an earthquake happens, a ransomware happens, you're all set. But nobody's ever tested the backup system can you restore it? We went into a client, they were backing up every day, and when we took a look at the backups, they really did not have a good backup for 8 months, but nobody knew it because nobody was looking at it. So to us, that's one of the critical things. How confident can we be that the risks are, that the controls are working correctly? You must be doing restores on a regular basis just to make sure, that you can restore your systems.
Part of our required process, we do, individual file restorations. We do major disaster recovery failover tests. We do all sorts of variety. Yeah. We even will failover operations to backup connections at, offices and run them on that connection for 24 hours to make sure that it's a serviceable connection and that they can do business on backup circuit.
Yeah, and you just said something else that I think to me is relevant here, because again, it's stuff we see out in the community. That difference between to be able to do a file level restore and recover from a catastrophic failure, where okay, we can restore our files, but did anybody bother to document the server configurations that have to be put on the server if you're rebuilding it from bare metal?
Right.
There's subtleties here that really have to be carefully looked at. And then to the point, okay, you've done all that, what's the residual risk? If we, all right, one risk, or one of the challenges we have to face are unpatched systems. So how strong are our controls that within a week, let's say, of a patch being made available, that patch gets implemented? Is that working correctly? And then what's the residual risk? Well, there it's certainly the time during which there's a 0-day exploit against that vulnerability that nobody knows about. So I mean, that's an example of residual risk there. And then final point at this place, for this perspective, given that residual risk, are we going to live with it? Are we going to strengthen controls even more so we can lower that residual risk to acceptable levels? I think that's, again, you guys live in that space in an ongoing way.
Yeah, and that's an important point. It's actually okay to live with a risk. You may identify a risk that is in that the residual risk is still in that maybe moderate category, but you analyze the effort or the cost required to remediate that and control it down to a low level, and it's so cost prohibitive that you decide to accept it. And usually those things are formally documented with what's called a risk acceptance.
Mm-hmm.
If everybody in the business agrees that yes, we're going to do this, then fine, you move on and you
Mm-hmm.
accept that risk.
Yeah.
And maybe you increase your insurance coverage or whatever
Right.
as an offset, but
Mm-hmm.
there's a lot of flexibility, and it's that goes back to the idea that it's as much art as it is science.
A kind of yes to that piece, and then the other thing you said that I thought was so important is, well, does everybody accept it? In other words, information security management is a team sport. It's not an individual sport. Here's our residual risk. Can IT live with it? Can the business live with it? Can the board of directors live with it?
Mm-hmm.
Those are the kinds of questions that need to be asked at that point, because it's, much as, information security is managing this whole thing, all these decisions are business decisions. They're not information security decisions or technology decisions or those kinds of things, but they've got to be surfaced up to where all the stakeholders have that opportunity to collectively decide, are we going to live with it? Are we going to strengthen controls? Are we going to get more insurance? Are we simply going to live with it? Are we going to get out of this line of business because it's too risky? And we don't want to spend the money that it would take to fix it up. And again, on that, we've had companies come to us and say they're being asked by one of their customers to implement a certain level of security. And we've said to them, how much business is that customer going to bring you? And when you begin to look at, well, it's going to cost us X and we're only going to make Y, it's like, you may not want to be in that line of business.
Yeah. Good term. It's a team sport. It really is. And don't forget that assistance with either assessing risk, addressing control weaknesses, sometimes that whole process is improved by bringing in somebody from the outside as well. You can live in a pretty small bubble sometimes, and you don't always see things that clearly. So we will bring our vendors into the process, for example, when it comes to our information security risk assessments. They have our information assets. We live in an ecosystem with them. So they sit down at the table with us to really help with the risk assessment. Mm-hmm. Likewise, if you need expertise, bring in a third party. There's different ways of doing that, but don't be afraid to bring others in.
Mm-hmm. Yeah, exactly. Great. This has been great. We're going to wrap it up now. So what have we done today? We've talked about the key role played by information security, the risk assessment in the overall process. Again, that assess, decide, plan, implement cycle that you run through regularly. And we hope with both through the example that was not information security, and then the looking down into the weeds to some extent on the information security side of it, you can begin to see how that how the elements of an information security risk assessment kind of fit together. Again, take a look at the resource kit, SecureTheVillage.org, our resource kit, because all of this information is listed, is outlined there as well. And of course, this webinar will be online in a couple of days so that you can go back and watch it, pause it, think about it, play it out in as it meets you. Our next webinar is August 2nd. That's going to be on information classification classification and control. I'm not sure who my guest is going to be then, but we're going to talk about, okay, how do you distinguish between the holy of holies, the stuff that God gods, we can't let that out into the public, or we can't lose that, and your website, your marketing material, all the stuff that you use to sell your company and so on. And how do you get control of that? How do you classify information? And how do you set up control? Who gets access to it? How do we have to protect it and so on? That's the next webinar. And this is part of our Secure the Village webinar series, all designed to provide management guidance, practical, real world, how to, very actionable, as you saw today. I mean, we're talking with John, you know, I mean, as we said throughout the show, John, you kind of live inside this, this world of practical, real world, actionable, kind of how to stuff. You're doing it day in and day out. Here's our schedule. Today in bold, the conducting an information security risk assessment. August, we'll be talking about information classification and control, the securing the human. That's on September 6th. And as you can see on here, we'll go through schedules laid out through January of 2019, which is, as you mentioned, Howard Miller and I will be talking about cyber risk and insurance. That's also an opportunity to plug, shout out to Pepperdine and their new cyber risk certificate program that Howard has been very instrumental in getting set up. And Secure the Village is very proud to be working with Pepperdine and the CYRP. We'll be hosting October 25th, Cyber Secure LA 2018. It'll be a one-day conference at Pepperdine's West LA campus. All of this is part of what we at Secure the Village do. Our whole mantra, if you will, is turning people and organizations into cyber guardians, so that you've got our attendees and the people that you introduce to what we're doing because you've been an attendee on these webinars, helping people understand what it is they've got to do to protect their sensitive information, whether in a business or as consumers. We've got the monthly webinar series. We have executive focus groups, which are also an excellent way for an organization that wants to understand what its customers are thinking. They can sponsor an executive focus group. We'll bring it together and help a business, help an organization understand their customers better. We've got the resource kit, www.securethevillage.org. Go to the resources for that. The Code of Basic IT Security Management Practices based on the CIS 20. And then community-based programs as well. The event we're having September 12th in the Woodland Hills area with Pyra as an example. Visit us at SecureTheVillage.org. Here's some contact information both for John and for me. And John, any final words before we wrap it up?
No, just, I really think it's great. What Secure the Village is doing, I'm very happy to be involved with the organization. It's really taking the concept of information security and extending it out to the entire business, not just the technology people. It's bringing everybody in, educating them, and making them stakeholders in the process. It is truly a village, and I'm really honored to be a part of this. And thank you for what you're doing, Stan.
Well, again, thank you. I didn't say it at the top of the show, I'll say it now, but John's not only on the Leadership Council, but John's part of the board of Secure the Village, helping us in all of our efforts. Again, to turn people and organizations into cyber guardians. So ultimately, the objective can be nothing less than a cyber secure Los Angeles, which is that's our mission, and the things we can do to help engender that, to help that happen. We're happy to be able to do for the community. That's this month's webinar. Thank you all for attending. Thank you for being a part of our village. And with that, we are adjourned.
Goodbye.
See you later.